Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of gold in front of us. Overall, we did pretty well yesterday, but this big red candle was out of syllabus. Okay. Yesterday, when I was recording the video, I had a buy at 2382. I told you guys that I will exit around 2386. I got my nice exit. When market came down to a second level, 2375, okay, I had a buy limit, but sadly market bounced from 2376, so I missed the opportunity. I got a nice buy at 23769. Okay, our third level. Okay, and market went up 2380, but I exited around 2375. Okay, so overall, okay, it was a nice day for me. I believe you guys also had a nice day. But when market fell, okay, big time, when market formed this candle, okay, I was not aware of it. Okay, because two TP hits, I was enjoying my day. Yesterday, when we were discussing casually about the strong support of 2355, 2350, okay, I was not expecting that we would get to see the face of 2350 yesterday. But when market bounced, okay, I was really sad that I missed the opportunity. Okay, anyways, okay, uh, it's part of the game. We can't do anything. And today is also an important day because we have the testimony of Federal Reserve Chairman Jerome Powell coming. So market will be volatile again. This week is very important because of the CPI which is coming on Thursday. But today and tomorrow we have the Federal Reserve Chairman Jerome Powell speech. So there will be some volatility. So my dear friends, be careful during the US session. Do not look for reversals. Do not look for levels after the news when the market will be volatile. Do not forget we are retail traders. Okay, we are retail traders. So only way to survive after news is to follow the trend of the market. We don't have that kind of information, knowledge to predict the market after news. So if you really want to survive, if you really want to trade after news, follow the trend. That's it. If you fail to follow the trend of the market, or if you're unable to understand what is going on, then just avoid the market. Okay, but do not try to act over smart because market is volatile. Because that's why people love to trade at the time of news, but maximum traders also lose money at the time of news. We need to understand. So protect your hard-earned money. Do not gamble. So let's look at the market sentiment first. Okay, gold edges higher as focus turns to Fed Powell's testimony. Gold prices ticked up on Tuesday with investors awaiting Federal Reserve Chair Jerome Powell's testimony and June inflation data to assess the next policy move by the US Central Bank. Gold edges higher as investors await Powell's testimony. So this is the ongoing market sentiment, means market is mostly waiting for the news. Usually, okay, I won't say always because things have been very crazy, unpredictable with the gold. Crazy is the new normal for gold, isn't it? Anyways, okay, before a major event, before a major speech, okay, market usually do not show much volume. Market prefers to stay silent. Before the US session, okay, we can expect these levels to work. If market behaves according to expectation, we can trade accordingly. After US session, nothing. Okay, so first of all, let's discuss about the support. Yes, we still have got good support around 2350. Okay, 2350, 2349 area. During the European session, if you see the market is coming down, market is going down, okay, you can expect a good buy around this area. This level will only work when there is low volume in the market. Okay, already market has formed a lower high. If market goes down after, listen to me carefully, if market goes down forming another lower high, it will indicate a temporary trend reversal because the structure of the market will no longer be bullish. Okay, so 2350 will be an important level. If market breaks the level, market may indicate a trend reversal, temporary trend reversal. And to break any level, volume is extremely important. So if market goes down with small candles, we can look for a buy around this area. The second buy on the chart of gold is around 2340. 2340 is also a support on the chart of gold where we can look for a buy because we are simply using FIBO here. Our FIBO has been doing a fantastic job. We have FIBO 50% retracement level plus the previous resistance will be working around 2340 area. So if you see that, okay, at one point market has crossed 2350, selling pressure is very high, then we can look for a support around 2340. Okay, so if you see the market is taking support, we can go for a buy position. But my dear friends, confirmation is important, means before hitting the buy button, at least wait for 30 seconds, 40 seconds, 1 minute. If you see that market is coming down with big red candles, avoid, use your common sense. If you see the market is showing price rejection from below, market is okay trying to take support, then only go for a buy position. Okay. And if market goes up, then day traders, okay, you can look for quick selling opportunity of 25-30 pips around 2377 and 2372. These are the two levels where you can look for a quick sell of 25 to 30 pips, not more than that. These are only trading opportunities for day traders. Why? Here also we have used Fibonacci. Okay, and while drawing Fibonacci, we can see that at 2372 area we have Fibo 50% retracement level plus the 50 moving average will be working as resistance, and at 2377 area we have Fibo 61.8% retracement level plus previous price rejection. So in this market situation where volume is low, if market reverses, if market struggles, we can hit the sell button. But during the European session, if the picture changes, because market shows volume sometimes during the European session. So if you see the market has formed a big green candle at 2372, avoid it. Okay. And number of trading opportunities before the testimony is very less. So see, yesterday it was a good day. We had 4 trading opportunities and almost all the trading opportunities did a pretty decent job. But today, if we fail to find a proper trading opportunity, do not force yourself. Okay, we are traders, we should only trade when the opportunity is right. And if you're a swing trader or positional trader, this is not the right time. After CPI, if market takes a particular trend, then we can look for a swing or positional trade. But before CPI, okay, things may remain a little bit unstable. So as a swing trader, positional trader, okay, you should just observe the market or watch the market. This is a market where you need to level, not even, you need to trade from level to level, okay, for safety purpose. That's all from my side, my dear friends. Thank you so much. And if you have gained knowledge, okay, if you like the video, then please press the thumbs up. Thank you so much. Bye bye. Take care.